Thank you, Simon. Sorry, I'll speak in English. On va le faire en français aussi, mais I'll speak in English. As Simon says, I think the third part of the report is really very different from the two other parts. It's really taking the point of view of a financial institution looking at its payments business. And as Simon said, there are extremely good news, like the growth rates and some of the changes, and there are risks on the horizon, not only linked to the regulation, but also linked to the landscape changes with newcomers in, with technology arising, and not to mention, of course, the economic context where that for a payment business has a strong impact. So the discussion we're having as Capgemini with our clients is really about what should I be doing and what are the key decisions that I should be taking. So the reports, and I'll show you some snapshots and some elements about what is in the report, but it's not all of it. It's really what the discussion has two focus. And it's on one side, should I build a hub, given my volumes, given my positioning, given my ambition in this market, and the contribution to my net income, how am I building on that positioning, and how am I going to defend and have a sustainable business on this? And in conjunction with that discussion on should I build a hub, is how should I build it? And hence the discussion of the insourcing and outsourcing discussion. Should I build an entire of it on my own? Should I outsource part of it to market infrastructures like SI, SSB or others that are in the room, for example? Or should I totally fragment depending on the products, go to the best of breed and so on? So the report is about that discussion, which is really now the impact on financial institutions and people that are participating to this market. They have tough decisions to make on their future in terms of business, but also on the infrastructure that is linked to their vision of that future. And you probably, there are a lot of changes in the environment. The traditional discussion is banks to bank and the nice schemes that all you know that involve the SEHs, SWIFT, and by the way, in each country it's a different scheme for the time being. Then you had the introduction of more businesses, more discussions on payments with access providers providing security and pass-through to organize the business to consumer. And now the third layer that you see is mainly the consumer to consumer, the P2P or business to consumer and consumer to business to payments directly. And that would probably have at the end a connection with some banking account or not. And when you look at all the initiatives that are coming, whether from the banking industry or from other industries, and you find here a list of industries, but to name some, telco and large retailers, but also transportation are creating their own payment means. And in the report we discussed some of the initiatives, but it's easy to find 20 initiatives on the back that are bank-led, that create that new world, and also 20 initiatives that have very, very little implications for the banks. So yes, Simon, it's a growing business, but a lot of people are interested in the growth of that business and its profitability. So I think it's why we say strongly that banks need to decide to what extent payments are core to their strategies. The first report 6 years ago was about the potential impact of the regulation on the bank's commission revenue. And we say, depending on the scenario, it could reduce from 30 to 60%. 60% reduction in the commission for payments where business, will say, commission, depending on the countries, but half is net income revenue and the rest is commission. But 60% reduction will put the bank in the black. So, and it takes time for banks to realize the importance of payments to their own contribution and business. But it's time to think about this because of what we discussed. You know, there's the global economic crisis that is accelerating the pace of the evolution. The global trade volumes went down, but they are a bit up now. There's still that, you know, Basel III discussion and the crisis lessons about the liquidity and the confidence issue on how you can understand how liquid you are. And then there's the stringent regulatory burdens. So, and of course, if you want to improve profitability, you increase revenue, reduce cost. So there are strategies about changing the portfolio of your products in terms of revenue-focused strategies. Also, expand the type of markets you want to go into and focus extremely and mainly on the corporate side, work on the client retention. On the cost-focused strategies, of course, it's linked to adding volumes to your current platform to reduce unit costs and improve the processes and using the new technology to reduce your cost. And there are also, because there are a lot of mergers in this world of cost rationalization, specifically post-mergers or integrating the world in the different type of banks. And specifically thinking, if you make it black and white, the world is, you know, you have centralized banks and then you have mutual banks. In centralized banks, you know, making cost rationalization is sort of easy. In mutual banks, where little regional empires and so on, and regional technology centers, you know, it's necessary, it's more difficult to carry it out. That's why we were saying banks have to make decisions on how we will need to balance their infrastructure discussions with partnerships, sourcing strategies, or building their own payments hub and factories. And you see it easily in the discussion we have with our clients or with RBS building the report, is partnership has a lot of benefits in terms of speed to market, of spreading and sharing the investment, reducing the operating cost, and extend sometimes the footprint in terms mainly geographically speaking. But it has another discussion, it has some challenges we'll see later, but insourcing or outsourcing is offering what we call insourcing. Outsourcing is based on your own platform. How could you insource others' volume to reduce your cost? So that means a number of things to do to achieve that. But it provides volume, scale, and efficiency. And it will, you know, spread the cost of the rising expenses related to regulatory requirements to a larger base. Of course, all of them has very, very tenuous and interesting challenges. The partnership is really about consolidating having a model that is stable and have the right controls. The thing we hear sometimes is also lowering the level of barriers for certain service areas. And you need suddenly to change a bit the culture of internal bank about, you know, we provide the service internally to providing externally. That makes some sort of a different culture. In insourcing, outsourcing, I think the thing is, the difficulty when we have implemented some of these hubs is really to carve out the payment business from the legacy environment. And saying, when someone says, I make a conscious decision that payments is going to be a full P&L, then there's a lot of questions linked to this. Which is the scope? And usually they are, you know, if you look at check, cards, direct debit, credit transfers, and whatever instruments you have, they usually have in different silos. And then if you look at the other side, on the cost side, they're saying, how do I manage the cost itself? There are a lot of costs that are shared and costs that are hidden. So my experience is today it takes about a year to get a vision about the revenue and about 18 months to 2 years to get a good understanding of a cost structure. It's not only internal costs, but also what is shared with the infrastructures and what is shared with others. So that's creating a hub or having the ability to insource, even to outsource, is a tough decision organizationally speaking.